Okay, there it is. And now it will be to share the screen so we can get it going. All right, let's just do this real fast. Here's what is on my mind. Um, it only takes a few minutes to do this. So we're going to look at the trades that I have for you, and then I'm going to move on to some of the other trading that I'm doing. And in order to kind of get used to being in front of the camera, just to kind of talk through my process and start getting used to that so I can quit stammering and yammering. So it can be more effective for you. So primarily, there will be a couple of days a week that we'll focus on this account, and then the rest of the time I will do my daily trading and kind of walk through my process for my own benefit. Um, yeah, let's just move forward. So here we are, the trade that we are in. We're still in, and we're okay. Uh, it has moved. Like for the day, it came down a couple of days. So we're still not scared of it or whatever. Because remember that ultimately the purpose is that this is the stock price over the last year. This seasonality chart shows the red line is what it normally does. The blue line is what it has done this year. We have had a very volatile year for a number of reasons. Um, you can see the big drop back in April that happened when the whole tariff thing started. And you can see another drop in June. I think there was more tariff stuff. And then in October, there was again. So, but the purpose of this particular, the reason we use these stocks that I've kind of isolated um, for this account is because there's a dividend that comes with the stock if you're left holding the stock for any period of time. So, like I said, right now we are in this trade. We On the 10th last week, we bought 100 shares for $103. At the same time, we took in $2.09, so our net cost. Matter of fact, let me do this. I'm going to do what I normally or try to get in the habit of doing now. What did I just accidentally click? It was trying to reset everything, turn it all to zero. All right, I'm trying to make a note. Huh. Well, that's weird. Okay. Well, I'm gonna drop down here so I can do something real quick. First thing I want to do is, since this is doing this, hit that button. I'm gonna add a price level of where we got in 103. Well, our here we go. Our at $103 is where we will be. Okay, so I'm gonna show that price. I'm going to name that price, and that is the break even for a 103 call. I need to go back to my other notes and figure out how I set this up so that it will be the same. But yeah, I said 103 is where we're going to break even. And actually, I should say it's where that person is going to actually take the stock. Because the fact is that that person paid $2.09 for the stock already. Okay, we see that right here. You see that? They paid us $2.09. We paid $103.16. So really our value. But that person, for them to take the stock, if the stock were, let's say, $103.50, right? So it went up, but they paid $2 for the right to buy it at $103. So they would really need the stock to get up to 105. You see that? 25. Okay, because they need to buy the stock. Well, actually, I guess it would just be 105.09 that they have to pay. We paid the 103.16, but they paid the $2.09. Then they're going to have to pay $103 for the shares. So the shares have to be $105.09 just to be a good break-even price for them. Right? That's the point where the stock has to get for them to take it from us. So we bought it for 103. It's worth, I mean, we paid 101, right? And we can see that if we go here to the account side and we look at our trade history, and we can see that what we paid was $101.07. That's how much we paid to get into it, because we paid that 103.16 minus the 209. So that's how we got that. Okay, so because that's where the price needs to be for them to take the stock. Because remember, if let's say it only gets to 103, I said $103.05. Well, no, let's look at this. We'll look at what we paid. So we'll make that price level in there as well. Oh, I gotta put it in. 101.07 is what we need to get back. And I want you to see okay, so we're going to show this one on the line as well. All right, and what we're going to have is the price that we paid to get in, which is 101.07. Okay, that's how much we need to get back just to be even. And that is not price level, that is entry price. Okay, so where we got in, and you can't even see it on this thing, is way down here. So if let's say the stock only gets to 103, well, with the 103.91, so it only goes up 50 cents by Friday. But if the person is not going to exercise because they already paid, they would be paying ultimately $105 for the stock. So they're not going to take it. They're just going to take the $200 loss, the $200 that they gave us. They're just going to take that loss and go like, well, I'll try again next week. Maybe something else will be better. And we will have the stock still. And we can do the same thing, because they may go, well, I think this week it's going to do it. So they'll pay us another 100 or 200 or whatever it is. We're only wanting 1%. So all we want is 100. So if they will give us that 100, we'll be fine. They may give us a little bit more. This week it was 2%. But then what we will do is, like, if the option chain doesn't show that, or if we just want to get out of it because what the stock is doing is not kind of where we want it to be for our, let me try and shrink this a little bit so I can, is this all the way back? There we go. So yeah, if it doesn't start moving upwards like we expect it to, then we will be able to sell it for anything over $101 and make a profit, right? So what we want is 1%. So what we want is for the price, well, to get our 1%, we've already did that. But if we then turn around and sell the stock at, let's just say, $103 again, so we sell it for the same price that it was when we bought it. Well, we made the $200 because we bought it for 101 in actuality, and then when we sell it for 103, we will make another $200, the $2 on the raise of the stock price. So that will be to our benefit. If, let's say, the stock is doing something and we continue to use the call process, here's the backup safety. It's not a plan. It's just the field that we're playing on or with stocks that are, at least some of them, have this dividend that comes every 3 quarters. So the last time they did a dividend was, show you, there it is, dividend on December 5th. So we missed that dividend, but if we were to be stuck holding it for whatever reason um, until March, there's another dividend that comes with it. And a lot of times, what I like to do is use the stock, get the deal, the position a week or two before the dividends come, because a lot of times with dividends, this one didn't do it. It kind of dipped into the dividend. But a lot of times at the dividend point, there's, well, the dividend point, but the X date, because there's two things to a dividend. You have an X date, that's the date of record, that's the date that you have to own the stock. You don't have to own it after that. So, like, if the date was like they were going to pay a dividend on Friday, but the date of record or the X date would be today on Tuesday, then it would be whoever owns the stock this morning when the market opens, those people will get that dividend on Friday. So if I own the stock right now and the dividend was set for Friday and today was the day of record, and then because I own the stock, I'm going to get the dividend. On Friday, if the stock goes up above that 105 and the person takes it, they'll take the stock, but I'll still get the dividend in a few weeks when that time comes. And that just happens over the course of business. That's one of the things that the brokers do is kind of the company gives the money to the broker for you, right? So like it's credited to your account. So for every share, that would be $1.26. So that would be an extra $100 there, right? That would come in just because $126, just because they pay the owners of the company. You are an owner of the company when you own the share. Uh, if you sell the share afterwards, you still get that dividend for that date. So that's that position. And back here to look at where we are on it, is that's the full deal. And then I'll just move on because after that I'm talking in circles. So I'm gonna drop this one. Yep. And I'm gonna do the things I need to do. Uh-oh. Oh, it locked because it's my cash account. Everything's slow when you're trying to do something. Okay, and this is the cash account. We don't really have a whole lot in here because I think I told you I'm kind of locked in on the bull. Webull shares. I've got in this account 100 shares that I actually bought at the high. I'll just go ahead and show you because that's one of the things that I'm kind of struggling with is trying to be honest about or open with where I'm at because it's getting warm. Turn that heat down just a little bit. Okay, sorry. All right, so yeah, one of the things I want to be more transparent about where I'm at because I don't want the impression to be this is easy and this is like simple. It's simple and easy, but it requires discipline, and uh, that's the hard part. As you probably are learning in your life, the things you want to do, but are made impossible because of choices you made earlier. So I kind of got out of the system. I had when I got caught in the bull, when I got caught in these, uh, I used basically all of my money on that trade, which is another thing I shouldn't have done. But then I started buying little positions in things that might go up or might go down, and none of them are going up. So the Cubit I bought for 20, it is now down to 10. The other I bought for $1.50, it is now at $1.25. The other one's $1.69, it's now down to 78 cents. So I'm about 50% loss on all three of those. But here's the thing, they're very small positions because I used all of my money here. And so there's six of these, which is not nothing. That's 120 bucks. That one was like $10 each for these other two. Um, and then I've used my money. And those are all not something you should do. They're basically lottery tickets. I mean, Qubit is quantum computing, and quantum computing is going to be the next big thing after AI. Well, AI is still a thing. So, how long are we waiting on that? So, I'm just going to leave that there. It is psychologically difficult because every time I look at it and I see that number, I just want to sell it. Then I go, well, I can do that. I can legitimately sell just to balance, get everything where it needs to be. But I feel like I just want to see where this takes itself, see where it ends up. That's what I'm doing. And then the same thing with these two were both uh, positions that I got into without any real understanding of why. Um, See, I have an alert on this one that if it ever gets to $1.24, so that I can get back to it and it'll email me or give me a notification so I can go and try and sell it, at least getting the money that I paid for it. Um, and then it's the same thing with the other two companies. And I unfortunately can't tell you what they are and why I got them specifically, because they were poor decisions. I didn't think about it beforehand. I did not have a proper plan when getting into them. And now I'm just kind of, on those, I'm just waiting again to see if they will rebound over the next couple months. Um, and that is that on that account. I don't want to go back over now. I need to do my stuff because I need to get out of here pretty soon. At some point, we'll go over this account and the history, how we got here. But I need to do my daily routine, which is the other portion or purpose of this video, so I can review it for myself to see my process. Now, the first thing that I do in the morning as it relates to my futures trading is come over here, and I need to get to this week and see what the reports are that are coming out. Now, there's a big report coming out uh, at 7:30. This employment report. There's this. These are all reports relating to employment. So there's the official unemployment rate, and there's a non-farm employment change, which is some, like, it tells you here what they do. They're shortly after the combination, job creation is important. There's a thing where I tell you what they do. Uh, Source measures change in the number of employed people during the previous month, excluding the farm industry, because we know that there's changes based just on that industry. But the same thing with retail sales, unemployment rate. All of these reports will come out, and they will cause the market to move. This is why we want to be aware of them, because they'll potentially make things happen that you're not fully expecting just based on the structure of the market. um, because suddenly the unemployment comes out. We don't know what it's going to be. There is a forecast. No, there's not a forecast on this report. And some of these reports don't have forecasts because we didn't get them months ago when we should have during the shutdown. Um, but in any case, so in November, jobs went down 13,000. In December 9th. Oh, 'cause this report is weekly. Yeah, I think this was the adjusted jobs after they finally figured out after the shutdown the real numbers. I think that's what that is. But in any case, those are what those reports are. All of those make a difference. Um, I also look at the earnings calendar, which tells me who will be having earnings calls this week, because that too can move the market if they're the big companies. None of these real big ones here, but like Micron is real big in the AI world, so that's a big one. General Mills is a huge company, so that may make some moves on the market if their earnings report. Because what they'll do with their earnings report is they have a call that goes to their shareholders, and it's a public call so people hear about it, and they'll say the things like, we made this much money, we thought we would make that much money, but we made a lot more. Stock's going to react to that. It may go up or down because of how investors interpret that. That's all for later. I'm not going to try to explain it because I can't. And then I look at the pre-market around the world, and it takes a minute. It should be populating. Oh, it's still doing. Good morning, love. Okay, here we are. Looking at Dow, S&P. I kind of look at the red or green to kind of let me know that the market is going down, down, down overnight. Yeah, currencies are moving up. Even gold down. Gold has been moving up. So the Nasdaq, the Russell 2K. Energy's down, technology's down. Okay, so these are all the sectors and whatnot. Um, and then I recently started doing this. Um, it's a website that shows you of the Nasdaq 100, the companies and where they stand in their particular performance. So, like the Nasdaq is 100 companies, and their activity, their return, like what their strike price was at the beginning of the year, and now it's $186 higher. These are all the big movers. These are the ones that are dragging it down. And these kind of give you some idea for opportunities. Because I look at something you might know about or whatever, like T-Mobile is down $10. That might be a good buy because you kind of would have to look at it, but it's just the things I'm looking at in the mornings to kind of have a feel of the market. And then what I need to do very quickly is set my two trades. My two trades on my futures trading account. Oh, this is the right one. Okay. So now, with all that information in my head, I probably should have wrote it down. With all that information in my head, I'm going to come to this account. This is what's called a prop firm account. I have two. In fact, I'm going to unlink them right now. Copy trading. Copy trading. I'm going to clear all that so there is no lead account. And then save that. And what that means is I've got two accounts. I've got a practice here, but I've got a live account where I'm trading $50,000 of their money. Not doing all that great right now. I'm down $300. And then another that I'm trading $50,000 with the goal of making $3,000 on that in order to get the higher account. This is two major max loss. Yeah, I'm in a bad position in this account, and I'm in a bad position in my other account, because in this account I'm down $300. It's a negative $310. My max loss limit at this point, it started at $2,000, and then I went up. In fact, I can show what I did here, so I can kind of see for myself. So I started. Oh, this is the last one. Okay. Yeah, I started this thing in September, I believe. Yeah, a little bit before this, but this is good. I'd gone down a little bit, came back up to zero or close to zero, and then got above and just making small days. And my goal is to get this upward, up and to the right. If I can get this line to look more like this, that's my goal. In order to do that, I've got to do better trading, which means I've got to follow my plans. And that is where I have been lacking over here and why it's taken so much longer. It's a mental game. So I went through what I do. I'm looking at those different deals. I am now going to, what am I going to do? See, I want to start using my trading view because it has some things that I can do that I can't do on here. But if I look at, now TradingView doesn't give me the latest information. Alright, I'm going to just switch. Oh, there it is. Okay. So the two things that I'm trading are the NNQ. And there it is. And this is 15 minutes. I don't want that. I'm going to take this indicator off because although I use it, I want to see my own drawings first and then see what it says. So if I'm looking at this from daily, I'm going to first okay, so what I'm going to do first is make some levels that are okay. I already have high previous day right there, and then down here going to do the previous day low. I'm not going to do it this morning because I'm running out of time, but I normally try to do my week and my month as well. Um, Actually, I will do the week because it is a new week, so I need to be aware of that. And once again, the previous week, oh, previous hour, over. Okay, that one doesn't show previous week, so we'll just change this one. Previous week. Alright. And that color should be. And we'll keep it visible all the way through. Previous week high. That. Boom. Boom. Oh, hello. Where's the line? There you are. And there you are. Okay. And there is where I will put previous week low. Right? And that one read. Okay, so now I've got those in there so I can see them as I'm going through. Because what we're doing is we're looking at this. This is what price is done day to day. And now we're looking at the 4-hour window, and I'm looking for zones of activity. Like I can see here, there was this that set off these buyers here. This was the turnaround. This was the turnaround point on a 4-hour window. I can see here where price went up off of why is it not collecting beeps, man? And this also is a 4-hour window where price turned around right there. And then if we step down one more time and we look at the hours, now we see that yesterday, 7 a.m., 8 a.m., when the market was about to open, that's when it went down. Because there was this big reversal that happened right here on the hour. It's not the opening hour. It is, but it's not the open. Like this is the entire open hour zone that I normally reserve that for. So the previous day's high and the previous day's low, we are right in the middle of those two things. And that is where I do not like to move. So I will not make a trade there today. But looking at this also on the hour, you see this? 7 a.m. Friday, price went down. 7 a.m. Monday, and the price went down. So we're seeing the price reacts right there. And it actually reacted to it again last night. It bounced off of it and came back down. I'm just trying to make sense of it. And one of the things that I want to be disciplined about is just having a sense of I wait. If there's not a trade, I don't take a trade. That's why I'm recording this so that I have to explain why I'm taking the trade while I'm doing it, because so often I'll go like, well, this might work, and that's how I'm down instead of up. I was up at one point on this account. Oof, just bad weeks. This is where it's killing me, is when after working so much, if I'm not actually following a plan, if I'm just kind of winging it, I'm not able to get it. And before all this overtime, I had times I could trade in the evening and could catch some of that back up. And so I just have to have a system to my trading so that it doesn't result in these losses. You see, I didn't take any trades last week or in the middle of the week. It was on my day off and then on Friday. And it was in both of those cases, I feel like that's why I'm recording now, because I think when I did it, I just was settling for a trade. And now I will have to come back and look at myself and say, what were you thinking? All right. So right now, this is really telling me no, right? Because it's in the middle. It's smack dab in the middle of yesterday's low. This has held pretty solidly as a bounce. So part of me wants to look at this, but I'm not going to, because that's 1 a.m. I have determined that my zones will only be formed during the New York session. Well, there is the open zone of the London session that I kind of notice some movement around, but which is why I was kind of looking at that. But really, it's here at 3 o'clock when they open, and you can see there was some basing and then it took off. I'm sort of tempted to put a trade right there, but what I'm going to do is draw that box so that tomorrow when I look at this, I will see if it indeed did come back into that zone and go up. Because part of me thinks you're going to come here and then go on up towards these areas. So I could put $100 risk on here and go for $300 or $400 for it to rise up above, right? But that's not a trade I'm going to take, because I only have, at this point, with $100 risk on my trades, I only have 14 trades before I'm gone. And my plan, my goal, right, is if I can get 3 to 1 or 4 to 1, but I've been going with 3. So if I can get 3 to 1, then that means I have to have, I risk $100 and lose, risk $100 and lose, but then on the third day hit that $100, turns into 300, then I've actually made those 2 back and I'm up 100. So even getting 1 out of 3 will go forward if you don't do things like I do, which is if I'm watching the trade and it starts to go my way, like if I had gotten here and was supposed to go here, if I'm in front of the computer, I might get here, and when it starts to go down a little bit, I go, I don't want to lose that money, so I'll just take that 100, which is the 100 that I risked, but it covers the 100 that I lost yesterday, but not the 100 that I lost the day before, because I took 100 instead of the 300. If that's making sense, we'll see. It makes sense to me, because ain't nobody else watching this. I'm hopeful that you guys will watch this eventually, but right now I'm aware that there are no news. So that's the NQ, and there's just not a trade there. So get over it. The other thing that I trade is gold. Gold, I'm going to do the same marks. Reset view there so we can see the whole chart. And you can see my drawings over time here. Okay, so there's my daily or weekly view. So I'm going to go with I didn't do that. So it's previous high. We're going to change that. Say the week. And we're going to put one down here. And low. But we'll change that text to say week. And we'll save this template. So I don't have to do that next time. Okay. And then I'll go to day and look at my previous day, which yesterday was the previous week high. So we put this here. No. There. That's the previous week's high. I am now on the day. Okay, that was right. Previous day high. And previous day's low. Now this may be a better place for us. Okay, so there's the daily. And we see a zone here for the daily that I'm going to draw out here. This is just the place where price accumulated the highest close, not the wick, but the close, and the lowest point, which is the wick, is my zone. So this is where I'm expecting there to be buyers that push this up. The price accumulated. There was a lot of decision over the days in that area, and then it took off. So we're looking to see what it's going to do. 4-hour chart is telling me something different. What is that? Oh, that's the zone I just drew, which I didn't make it a day zone so that I could keep it my colors together. There we go. So I can just kind of know what I'm looking at. We've got different colors for 15 hour. Okay, so it's coming down into that hour. And it's kind of turning, might be turning as we speak. And going from the previous day's low on up above to the high. This may be a very good trade. I just don't, got to find my entry point, which, okay, this is, I drew this because this is a 10 o'clock zone. It formed and then price took off. It's come back to that price. It's in it. Now the question is what you're going to do next. Because we are in, this was a whole day of activity that just went nowhere. All right. And that's what you're in right now. I mean, that wick shot down there. And what am I doing here? 15 is the absolute lowest I will go. For two reasons. One, this has a 15-minute delay, so I'm missing the last 15 minutes info. I mean, I get it live up here. Matter of fact, let me see that real quick, because this is gold. And I have made the no. So if I look at this chart, oh, this gets on 15. Where is it? Okay. Yeah. We put that down at 5 minutes. What 5 minutes was it? At 9:30. Okay. That looks very good. That looks promising to me. Because you're saying here, this is on, and actually, I can't look, but I think this may have been the zone that Randy gave us on that. Oh my, it's 10. I'm like running out of time. All right, now we're on 15-minute zone underneath there that I like better. And this can be one that I can just set and walk away from, because what I'm going to do here is see if it'll allow me to bring up the trading panel. Well, paper trading's fine. Okay. Yeah. Yeah. Oh, are we still? They still got that contest going? Huh. Okay. Well, I'm not doing that anyway, but so I'm trying to maximize my risk at $100, right? So that's what that's gonna look like. But I keep grabbing things. But that's not where I said. That's not where I said at all. I said down here. And that's 132 risk. And the best way I can trim that is to just say come all the way down to here. Rationale being, obviously I am trying to get my risk where I can afford it, but I want it to be where it will be effective, right? Because like that right there is the price. That's where the lowest wick went and then moved off. So if it gets back there and reacts again in this range and goes back up, my take profit would be 4 times that, or 3 times that rather. Should be 250, right? Because if you take, yeah, you take that $85 times 3 and you get 255, would be about right in here. So if price price comes down here. Do this so that yeah, I want to do the trade. Oh, it did. Oh, because it's saying the competition's ended, so it's trying to put me in this competition. I'm not trying to be in. There we are. Yeah, that's better. Okay, now let's get it back down here to the spot where I said the risk that I said. And take profit that I said is up here at that low, and that's 1 to 3. And now this trade is in order without real-time data. That's okay. This is the trade that I'm looking to make today, and we'll look at it tomorrow to see if it happened. So I am. Let me. I don't have my pencil. I need to write that down. There's my pencils. There's a pen. All right. So I'm writing down. I am buying. Okay, so let's see. Entry. It's 4305. Why is that saying that? Oh, that's not right. It didn't show that. Okay, it's 4285.8 and 4277.9 is my stop loss. And I'm going to exit at 4311. 4311.0. Okay, and we're going to just enter that as a trade. I'm not even going to do the whole drawing thing. I'm going to enter the trade. How do I do that? It's the first time I've done it this way, because normally I just do a market order. So I'm going to do a limit. Oh, this thing has the way they do their breaks is that you have to tell them what you want. So I'm going to do 100 to 300, which is 1 to 3, and it'll be a little more risk on it, but it'll still be there. So I'm going in at 4285.8. Yes, dear, I'm coming up in just a second. Thank you. Bye. Once again, your mother saves me every day. Now, I am seeing the price is going up now, and I am fighting the urge to just jump in because it might go all the way up there. I still think it might go up there, but I think it's going to go here first. 4285, just under their previous day low, which I've also identified as a 5-minute zone down here. So, but I'm not using that at this moment. I'm using 4285.8 is my entry. I'm going at a 1. Oh, there it is. I need it to be 1 to 300. And if I do that, yes, there it is. So I'm looking for price to drop down here, turn around somewhere here, and go right back to where it is now, ultimately going up. But I just want that catch right there. And I will do the same trade. Trading combine. And actually with that one, let's see here if it will let me move that up a little bit, because and we'll see how that works. And that's it. I'm done. I'm not going to keep trying to find a trade that I can get right this minute. This is my problem. But here's what we're looking at in real time. Prices reacting to the buyers, or I mean the sellers that came in here. First off, they came in here. A lot of sellers, because price just dropped right down there, meaning it skipped over all the people wanting to sell at this price. So when it gets back to them, they will sell, and then the price will, I suspect, begin to drop again back down. This time with a little volume as the time is picking up now, more and more people getting online for today's American session, and that volume will perhaps push it down to here, running into these buyers, and there make the change. That's my theory, my thesis. That's where we're going with, and we'll see how it plays out tomorrow. And we'll get better and better at this. And it's a lot better just talking through my process.